Hello, this is Brian Lysing with Financial Brokerage, and today I'd like to discuss what I would call the life insurance coverage continuum. Now, this stems from some conversations I've had with some of you regarding policy reviews, clients that have had policies for a while and they're realizing that they still need some coverage later on in their life. So I'd like to take you through the reasons people purchase life insurance at different stages of their life, and you'll see that the needs will change, but the coverage amount will probably stay about the same throughout a person's lifetime. So let's take a look starting with a younger individual, and let's say we got a person just starting out in life, 25, 35 years old. Maybe they just got married. They realize that they're depending upon two incomes now. Well, we need to make sure those incomes continue if one of them passes away. So we need life insurance to do that, and probably just until the age at which they retire, right? So let's say we need $500,000 to age 65, for example. Now, let's say this couple purchases a house. Well, we need to cover that mortgage until it's paid off. So we need a little bit more coverage, usually for 30 years, your typical 30-year mortgage. Now, what if a couple children or 3 or 4 children come into the picture? Well, now we need a little more income that could potentially be replaced if a person passes away. We need more life insurance, but just until those children are out of the house. So maybe we need 20 years of coverage. Now, since we have children in the picture, they'd like to go to college someday. What if mom and dad aren't around to help pay the tuition for those children? Well, we need to provide some extra money to pay the tuition if mom and dad aren't there. All right, we need that amount until the children are out of college. So you can see we can easily get to $1.5 million of coverage roughly through age 65 or a person's retirement age. And at that point in time, all these needs go away, right? The kids are out of school, the house is paid off, the retirement account has been built up. Well, there is still a need for life insurance in a person's retirement years. Nobody's going to die for free. There's always going to be expenses associated with the funeral. Not much, but we're going to need something, and we're going to need that to go till the client passes away. So term insurance isn't going to work anymore. We need a permanent plan. Now, on top of that, we still have an income replacement need, believe it or not. If you have a husband and wife, they're receiving Social Security checks. If one of them passes away, the greater of the two checks will continue to come, but it's only one check, it's not two. So we need some life insurance to replace that income. Once again, we need it till the end of the person's life. Now, on top of that, the biggest financial threat a couple faces or an individual faces in their retirement years is the high cost of long-term care. These days, a lot of people are choosing to cover that with a life insurance-based solution. They can draw on that death benefit while they're still living. Well, we need to provide for that now too. And we need that amount to the end of the person's life. Now, if these folks are very successful, they might pass away with some retirement money still intact. If it's from an IRA, a 401k, a 403b, that money is still taxable to somebody. Their heirs have a choice of taking it all at once and paying the tax all at once, or spreading it out over a period of time. Either way, it's still taxable. Well, why not provide a life insurance policy that will pay the tax on that qualified money? You could even do one better and name a charity as beneficiary of that retirement fund. Now, the charity pays absolutely no tax, but you do need a little bit more life insurance to replace that fund to the family. So now we've made a good argument for the same amount of coverage need throughout a client's entire lifetime. Early on, it can be term, that's fine, or a blend of term and permanent. But as a client ages, you want to conduct policy reviews with those clients and make sure they realize that, hey, even though their needs will be changing, the total amount will likely stay about the same. So we need to have that conversation about what are we going to do with this coverage. Let's get more of it into permanent as we can. So hopefully that gives you some good ideas and provides a great conversation piece when you conduct policy reviews with your clients.